Welcome to Drill Down Earnings. We have quarterly results from Cloudflare Q3 numbers from this big provider of cybersecurity services. This is the business story behind one stock on the move. I'm Cory Johnson from Epistrophy Capital Research. And Q3 earnings for this company were better than Wall Street expected, but the guidance was worse. So $430 million in revenues, 20 cents adjusted, whatever. Next quarter is supposed to be about $451 million in revenues. Now that's better than what my estimates were, but maybe importantly for the stock, less than what Wall Street had expected. So there you have it with the stock selling off in after hours. Let's show you some of that. So we dig a little bit deeper into the business here. Revenue growth powering on here. 28% year-over-year revenue growth, now well over $400 million. And it's really nice growth from a company that's pretty big at this point. And they're also creeping towards profitability. A 7% negative operating margin is better than it has been. And like I said, getting in the right direction where they might actually start to make some money here. Now they had steady growth in their smaller customers that spend less than $100,000 a year. They're growing at 5%. But the big customers growing at 7%. So actually outpacing what they're seeing with the smaller customers. And so they're really converting those smaller customers into big spenders. That's a sign of a real powerful sales staff. We have our favorite salesperson at Cloudflare. She knows who she is. But look, when we look at what's happening in the stock and after hours trading, it was down 8% when the market digested this guidance, not quite what they wanted. Although for the year, the stock's still at 45%, not half bad. So Cloudflare CEO Matt Prince was asked about what's going on with the environment for cybersecurity. He talked specifically about the presidential election, saying that they really fought off a lot of attacks that might have disrupted the election in the US, and they were proud to have done so. But here's what he had to say about the spending environment right now.
I am not shy about talking about what we see or talking about macro concerns that are out there. I don't think that we see anything that is worse. In fact, I think we see an environment that maybe is ever so slightly improved. We saw real strength actually in Europe. I know another number of other companies haven't seen the same, but we executed well there and continue to see strength there. Asia has performed very well, and actually, from everything we've seen, the crystal ball, North America has leveled off to slightly improved. I think where we have room to improve ourselves, and where I'm optimistic looking forward, is around our own internal execution. It has nothing to do with the macro.
So really interesting time right now in the world of cybersecurity. We're going to get a lot of companies reporting in the cybersecurity world right now in the next 10 days or so. So we'll get a sense if this is a Cloudflare issue about things slowing down in terms of growth for next quarter, or it's industry-wide. We shall see. But your big drill down earnings takeaway on Cloudflare's Q3 results, $430 million in revenues, guidance a little lighter than some people on Wall Street expected. But I think the most interesting thing here was we saw the big deals closing at adding 7% in terms of big customers, whereas 5% growth in the smaller customers. A little bit of a change from what we've seen in the past from Cloudflare. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson.